Elon Musk's decision to rebrand Twitter as X was a surprise to many who don't know the backstory. But before there were Tesla or SpaceX, Musk co-founded an online bank called X.com. For more on this, we turn to Daniel Wolf, American banker, content director for payments and credit unions. And that, of course, then was sort of the precursor to PayPal and the so-called PayPal Mafia, which included Elon Musk and Peter Thiel and some other folks who have been over there in Silicon Valley for a long time. So what can we sort of learn from X.com and the legacy of that and what it could mean for what he's now attempting?
So what it demonstrates is there is this legacy with Elon Musk where he has this history of creating this internet bank. And this was created at a time when there was a void to fill, where banks were having trouble figuring out how do we get people to use our services to pay for things online. And X.com and eventually PayPal filled that void and was even able to muscle out what the banks were doing, certainly on eBay and there as well. And when they rebranded as PayPal, they kept the X.com name. And for a number of years, if you typed in X.com into your web browser, you would just go straight to PayPal. So they kept that and they tried to capitalize on it once again later on under eBay as X.commerce, a way to bring in developers to build things on top of PayPal, on top of eBay. And ultimately, PayPal spun off and the brand name went back to Elon Musk.
And so all of this considered, I mean, how does this set up for what they want to create in a super app and even kind of leveraging that super app as a play for financial service as well?
So if you look at the evolution of X.com and PayPal, it's no financial services company ever likes being just one thing, because then they risk becoming the dumb pipe that other people build things on top of. They want to be involved in that. They want to be enablers. And so you saw PayPal do that when it went off eBay to be in stores and to add services like PayPal Pay Later, Venmo, which they bought through acquisition, and so on and so forth. So with X.com, it kind of signals that this is going to be more than just, okay, I see something on Twitter, I want to buy it. The problem is Twitter's already tried something like that before. They've tried things like turning their platform into a platform for commerce. So people advertise things on Twitter all the time. They advertise themselves, they advertise their work. And if you want to actually pay them for something, you click a link, you go to their website, their Patreon, what have you. You don't necessarily type your payment credentials into twitter.com or X.com now. So they've tried that, and it hasn't really turned Twitter into this everything app that Elon Musk wants to try it with, but he did build that foundation for PayPal. Now PayPal still exists, so he's got to contend with that as his past success is now potentially his competitor, but it demonstrates kind of what Twitter has wanted and what he brings to that as well.
Well, and the other side of it is, it's not a nascent technology anymore.
No.
There's not just PayPal and Venmo. There's Square. There's Zelle. There's lots of other ways. There's Shopify that is sort of facilitating payments for e-commerce also. So it seems like it's a much bigger lift now than it would have been then, because now it's just another one instead of the first mover, right?
Exactly. And it's, as I said before, when X.com started, it was filling a void. Banks weren't able to enable a payment. And when we look at it now and today and what they're trying to accomplish, they need to solve a different problem. So what does Twitter or X.com bring to that equation? Well, it brings audience. I want to look at the Apple Card, for example. Whether or not you use an Apple Card, if you're a college student and you want your first credit card. When I was in college, if I needed a first credit card, I would walk around campus, somebody would offer me a free t-shirt, maybe a king-size Snickers bar, and I would hand over all my personal information, and I had a credit card. But now you don't do that anymore. They can't. So if I need my first credit card, maybe it's in an app I already use, whether it's the wallet app for Apple Card or Twitter or Uber or what have you. You see in Singapore, GrabPay, for example, is built on the Grab ride-sharing app. You have WeChat Pay built on WeChat. So if he has the audience and he can hold on to a significant number of people who are willing to put more of their lives into Twitter/X, then that's something that can be built upon.
It also strikes me as a big if, though, because you look at the much more dominant social platforms. I think of Meta. It would be very logical for Meta to do something like this. They already do a lot of commerce on things like Facebook Marketplace and on Instagram, for example, but there's no intrinsic payment system there, which maybe I'm extrapolating that means it's hard because they haven't done it.
Meta tried.
But I don't know. Meta tried and it didn't really, Libra wasn't,
Libra/DM, yeah. They tried to have a cryptocurrency. They also pitched themselves as a marketplace kind of like eBay. Since they had the ability to take payments from advertisers, they wanted to build on that. And then when they launched Libra/DM, they had the buy-in of major card networks, banks, other players in the financial system. They had all their ducks in a row, but they found that people just didn't want to use, they were skeptical of Facebook. I mean, we all hear a conversation about people saying, oh, I was talking about a particular hat near my phone, and then I saw an ad for it on Facebook or wherever. So there is an issue of trust, and Twitter, no doubt, has to confront those same issues.
I'm so glad you said that magic word, which is trust, because that's something that a University of Michigan professor told us as well around this pivot, around this rebranding that Twitter has made, and even the ambition that they have to have at X, a super app, because at the end of that is the data that somebody's going to have to give up. I'm sure you weren't able to stretch that Snickers bar the same way that a bank was able to stretch the data that you were surrendering to them. And so here, trust comes back into play, and trust for Elon Musk, as well as the combination of different experiences that he wants to bring together. And even if we could see, and I guess the crux of the question here too, even in advance of that trust, you've got a person who's known as the Doge father, who's sent wild swings through cryptocurrency in the past, specifically Dogecoin. Could this be an app where they try to attempt to have a differentiating factor come through via crypto?
Yeah, so obviously, as you mentioned, Elon's, and before I get into that,
sure.
Once I got the credit card, I was able to buy as many Snickers bars as I
that's
wanted.
Great.
I could stretch
Lifetime supply.
Oh yeah. No, so yeah, there is his relationship with Dogecoin. If you look at his bio on X/Twitter right now, you will see the Dogecoin symbol as his location. So he's definitely still got that attachment to it, and what you said with the valuation swings and so forth. And we've seen other payment companies actually make significant money by being a platform where you could buy and sell and trade crypto. Maybe not so much where you could spend it, but certainly his attachment to it and any affinity that people might have for Dogecoin, that could be something to capitalize on. But again, turning it, there's other companies that do that already. Sure. Turning it into something where you're willing to spend your Dogecoin or Bitcoin or what have you, that's been a challenge since the dawn of cryptocurrency. That might be something where we see some revenue from buying, selling, trading, but that's not the only thing that they should be doing.
Yeah, utility has certainly been difficult. Daniel Wolf, thanks so much for taking the time here with us today. Really appreciate it.
Thank you so much.
Absolutely.
A lot of fun.